Hello and welcome to today's video on high altitude investing. In today's video, I'm going to be teaching you guys a little bit about fundamentals, so let's get right into this. What are fundamentals? Fundamental trading is a method by which a trader's focus is on a company-specific events to determine which stock to buy and when to buy it. And another thing I wanted to point out is that ICOs, you should learn their fundamentals if you're going to be doing ICOs, because it's probably your best determination of what you're going to be able to sell that price at when it gets added to the exchange. Now, key points about fundamentals is if you're going to trade fundamentals, you want to make sure that you have very accurate sources. I rarely trade on fundamentals personally because I like the numbers and the chart patterns, what they tell me more. Only use it as an additional criteria for a trading plan if you're going to. So if you see a buy setup and it has good fundamentals, then it's good to have it as an additional criteria to that trading plan. Don't rely on it completely. It's a terrible only buy or sell signal, and if you do only buy or sell based on fundamentals, then you're not following your technical analysis and trading plan, which is what you're supposed to be doing. So watch out for that. You do not want to rely completely on it. Another thing is there's lots of unpredictability factors involved. This is why I don't use them a lot. You don't know for sure how many people know it, how much of it's already priced into the market, when it's going to actually happen, if it's actually going to affect the price, if it's actually legitimate information, you have to check that. So these are some of the reasons that I find trading fundamentals to slow me down more than they help me out. Generally, if I'm day trading or intraday trading, I do not trade with fundamentals. I use technical analysis, set stop losses, have a trading plan, and follow it. No matter what the order book says, no matter what the fundamentals say, I will follow my trading plan because I trust the technical analysis more, personally. But that's a decision you have to make, but that's one I made and I found very, very useful for my trading. Now, like I said, it's prone to manipulation if it's from the wrong source or if it's not actually going to happen. There's lots of factors, right? It's unpredictable. But usually when fundamentals do happen, stuff that changes, like SegWit, right? You buy the rumor, sell the news. When SegWit happened, there was a dump in Litecoin. That's because people bought the rumor. They were buying up to that point. The price was getting priced in. So the day Litecoin happened, it dumped because all the sellers came in because all the buyers had already bought because they knew that was coming. Or they had a rumor at least that that was coming. So when the news actually came, they sold off. So if you do trade based on fundamentals, is buy the rumor, sell the news. It just depends on, whether it's a good thing or a bad thing for the project or coin. Depends on whether it's a bullish or bearish fundamental. So yeah, with bearish fundamentals, you want to sell the rumor, buy the news. And with bullish fundamentals, you want to sell the news and buy the rumor. And like I said, they get priced in very quickly too. Like, I personally think that the big thing with Bitcoin right now, the whole August 1st thing, is getting priced in right now. We could drop a little bit lower in Bitcoin, but the trend is still intact. And I've still been buying dips because that's how I trade Bitcoin, and I'm not trading based on that fundamental. I do have a majority into other coins right now, but I do keep my 70% in Bitcoin, and I personally use Bitcoin as my main currency, and I keep that on my Trezor wallet on me. But I still see support. We're just in a dip, so I've been buying Bitcoin even though there's fundamentals that are bearish. Remember, they could get priced in very quickly. It's unpredictable, and I'm not going to rely on news in my trading personally. So that's how I go about that with the whole Bitcoin thing. But here's an example of a fundamental in trading. You can go look this up on Google. Wikipedia has a great article, Bitfinex_hack. But if you look, this is when Bitfinex got hacked on August 2nd, 2016. I remember this day because I watched Bitcoin go up to $750 prior to this. And when this happened, it was interesting to me because this was the first fundamental that I noticed have a significant change in the price of Bitcoin. When I was first getting into this, I basically would chase coins, but I would trade with Fibonacci still. So I kind of knew what I was doing, but I didn't have a trading plan. And so when I saw this, I was like kind of interested in trading news, but I've later found that I made a lot of bad decisions trying to trade news after I watched this happen because I thought it would be reliable, but it actually just taught me that news is less reliable than you can expect. This is just proof that at any random point, price could go a certain direction. So if you don't have a stop loss in and you didn't have a proper trading plan, then you could be affected more by this fundamental than not, right? So there's lots of things that you want to pay attention to, basically. But that's what I wanted to go over with fundamentals today. Thank you guys for watching today's video. I hope that you learned something. If you have any questions about fundamentals, go ahead and let me know. As always, I will catch you guys in the next one, and stay profitable.